All right, let's get right into it. Today, we're breaking down a really serious forecast from, well, arguably the greatest investor alive, Stanley Druckenmiller. And just so we're clear, he's not talking about some little dip in the market. Nope. He's forecasting a complete and total reset of our financial world as we know it.
I mean, just listen to that quote. The United States is like a drunken sailor, but the sailor has run out of money. Now, you have to understand, this is a guy who is famous for being incredibly precise with his words. So when a legend like Druckenmiller says something that blunt, you better believe Wall Street stops and listens.
So to really get the weight of this warning, you first have to understand the man himself. Why does his opinion carry so much weight? Why should we even care? Well, look at this track record. For 30 straight years, he managed money through every crash, every bubble, you name it, and never had a single losing year. That's not just skill, that's not luck, that's a level of mastery that is just almost unheard of in the history of finance.
So here's the crucial thing to get. His focus right now, it's not on making his next $1 billion. He's seen it all, done it all. He's sounding an alarm because he sees something coming that he believes is a pure mathematical certainty, an economic reckoning that he thinks is now completely unavoidable. And that brings us right to the heart of his argument. It all comes down to a single number, a debt so massive that it's almost totally ignored by the mainstream news. This is the number he thinks changes absolutely everything.
And this slide just lays out the disconnect perfectly. On the left, you've got the official U.S. debt we always hear about, around $35 trillion. But Druckenmiller says, hey, that number is basically a lie by omission. The true debt, on the right, includes all the future promises we've made for Social Security and Medicare. It's all the money the government has promised it will pay out, but has absolutely no way to actually fund.
Just take a second and let that number sink in. $211 trillion. That is the fiscal waterfall he sees heading straight for us. I mean, to put that in perspective, that's almost 10 times the official debt and way more than all the wealth in the entire country combined.
Now, for years, this giant number was kind of this abstract problem we could kick down the road. Why? Because interest rates were basically zero. It was the era of free money. But as we all know, that party is over. And now, the bill for all this debt is coming due. And the interest rates are no joke.
And this is where the math gets genuinely scary. By 2026, and folks, that is not far away, the interest payments alone on our national debt are set to be bigger than the entire U.S. defense budget. Think about that. This is what Druckenmiller calls the fiscal death spiral.
So if that's the ticking time bomb, what's the spark that lights the fuse? See, Druckenmiller doesn't think this is going to be some slow, gradual decline. He's predicting a hard landing, and he thinks it all starts with something he calls the zombie massacre.
Okay, so let's quickly define what a zombie company is. For more than a decade of super low interest rates, thousands of unprofitable businesses have basically been kept on life support. They don't actually make enough money to cover their own bills. They just survive by constantly taking on new, cheap debt to pay off their old debt.
And here is the chain reaction he sees coming. First, a huge wall of all this corporate debt is scheduled to come due in 2026. These zombies have to refinance, but guess what? They can't afford the new 7 or 8% rates. So a wave of defaults starts, and that shockwave ripples right through the economy and smashes directly into the heart of the banking system.
But hang on a second. I know what you're thinking. What about the AI boom, right? That's supposed to be the golden ticket. Surely all this incredible technological innovation can help us grow our way out of this mess.
Well, what's so fascinating is that Druckenmiller was an early huge investor in NVIDIA and made a fortune on AI, but he's been selling, and he draws a direct line back to the dot-com bubble. He says, look, the internet was real, it was revolutionary, it changed the world, but tech stocks still crashed 80%. He sees that exact same excessive euphoria today and warns that, in the end, macro gravity always wins.
For decades, investors have lived by this one simple rule, the Fed put. It's the belief that no matter how bad things get, the Federal Reserve will always step in with cheap money and save the market. Well, Druckenmiller's view on this is absolutely scathing. He says that's an illusion now. The government fired all its bullets when times were good, and when the real crisis hits, the toolbox is going to be empty.
So, what does this all mean for the long term?
This isn't a prediction for a quick crash and then a speedy recovery. No. Druckenmiller believes we are staring down the barrel of a lost decade, a period that will completely tear up the old investment rulebook.
This slide just captures the massive shift perfectly. For most of our investing lives, we've had the wind at our backs, a 40-year tailwind of falling interest rates that made everything go up. That world is gone. Now we're facing a headwind of high rates, which creates what he calls a volatile trader's market. You can't be a passive passenger anymore. You have to be an active pilot.
And what that means is that the old playbook, it's dead. That classic 60-40 portfolio, 60% stocks, 40% bonds, where the bonds were supposed to protect you when stocks fell, that safety net is gone. In this new world of high inflation, both can fall at the exact same time, leaving you with absolutely nowhere to hide.
Okay, so if the old strategies are totally broken, how in the world do you actually prepare for something like this? How is the master himself positioning his own money? Well, that brings us to what he calls his survival portfolio.
His whole idea is built around something called the barbell strategy. Now, this isn't about finding some safe middle ground. It's the opposite. It's a portfolio of two extremes. One side is ultra safe, designed for one thing and one thing only, preserving your capital. The other side holds really aggressive bets that are designed to profit when the whole system gets chaotic.
So, what's actually in this portfolio? First, hard assets. Things like gold and commodities. Real stuff that the government can't just print into oblivion. Second, he's looking at shorting the US dollar, a direct bet that the drunken sailor is eventually going to fall over. And finally, and this one's a bit tricky, he holds some long-dated government bonds. This is a very specific hedge. If we tip into a true deep depression, the Fed would have to slash rates to zero, which would cause the price of these bonds to skyrocket. See, the goal isn't to get rich right away. It's just to survive what he calls the initial impact zone.
And this all leads us to the central debate, the big question. Is this coming reckoning an apocalyptic crash, or is it a painful but necessary reset that actually creates a massive opportunity? You can really look at this through two different lenses. Is it a hard landing, a total structural collapse that just destroys wealth, or is it a rational reset? This view says that, yeah, it's painful, but clearing out all those zombie companies and bad debt is a necessary cleansing that creates a much healthier, stronger system for whoever survives.
And this quote, "This is the little sliver of hope inside this entire dire forecast. Yes, he thinks the hard landing will be terrifying, but for those who protect their capital, for those who survive the storm, he believes it will create the single greatest buying opportunity in a generation. The whole game is just not getting wiped out on the way down." And that really brings us to the final and maybe the most important question of all. And this one isn't about your portfolio, it's about your own mind. For the last 40 years, the market has pretty much been a one-way street, up. The man who never lost money is now warning that the road ahead, well, it isn't a road at all. It's a cliff. And the only question left to ask yourself is this: have you prepared for the psychological shock of a market that doesn't just go up?